Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 24 hours it's been rather volatile for the Australian dollar after taking the challenge back towards that 67.35 level once again and was rejected and therefore has buckled and maybe actually see a further slide into today's price action. In light of the pattern, there could be further risk towards the region of 66.65, and if that breaks then we're looking down towards 65.90. From that area, we have seen quite a relatively bullish response and therefore may do so again. It doesn't look like the Australian dollar is going to break out of its current range of 65.90 to 67.35, but from the overnight rejection does put a slight weaker play into Friday's price action. The euro also took the challenge to the upside on Friday and found much more resistance, that is around the region of 109.50 area. It was seen that from around there or towards 110 as a supply area, and it looks like from the bullish attempt we are seeing supply coming back into the market, and especially after the 6-day price action some profit taking seems to be returning, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, it staged a modest rebound after touching a low around 101.50, is now trading around 102.20. With yen strengthening, the market still looks towards the bottom side of this range that is seen somewhere around the 129.80 to 130.15. In light of where the market is actually showing response was from this region back in early February, and if we do see a touch or towards this level may again see a rebound, and if so I feel that the market can actually retrace back towards the 134 region. The pound was very whipsawed overnight as the Bank of England, as widely expected, increased rates by 25 basis points as widely expected from 4% to 4.25. The market was somewhat hesitant in taking the challenge beyond 123, and I would say that from recent times that we can see back in January and also here in December, the bears are camped out and likely to be staying here for a while, and therefore any return price challenge would again expect to see rejection. In light of the current weakness and some divergence here, I do expect to see the market pull back to 122.50 to about 121.85 and then reassess. Well, after a very strong rejection from that 2000 level, the market's taken the challenge back again. Due to the midway point rebounding, we are looking possibly now towards the top side level around 2002 to around 2007. I'm not overly bullish at these levels after seeing many fouling attempts here, and you can see even back here in April 22 and also around this region where in February 22 that the bulls are likely to run into an ambush and expect to see another rejection, and if so look back towards the bottom side around 1968 to the base at 1938. Having taken the challenge to the top side, the market was somewhat hesitant towards that key level of 72.40.60, and from there the market has posted a weaker candle. Keeping an eye on this pattern, we do see a challenge to the downside. 68.60 should provide some kind of cushion and maybe even see a rebound and look back towards $72. Well, that's a wrap for the morning. Thank you very much for joining me, and as always look out for the intraday report and I hope you enjoy the great start to the day.